Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, May 16th, 2023. It's now the 15th. We start off in the S&P 500 daily chart and DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup one count. And to negate that for end of day on the 16th, there must be a close below 4137.64 for the price flip to the buy setup count 1. So as per the close for open hours on the 15th, price is under this level's close, and there could be a price flip back to the buy setup one count if it can't get above that level for the beginning of the day on Tuesday. And price could not close above the disqualified momentum up level for 50% for end of day on the 15th. So the only level to become qualified to the downside is this trend factor down 1. The ongoing demand line could become qualified with a close below that, and price would need to open above this ongoing supply line and then close above this ongoing supply line by end of day on the 16th to get that qualified. And price decides to blast off to the upside, closes above these ongoing supply lines, will become qualified end of day on the 16th. And the conversion line bumped down a little bit more. It's at 4101.28 to start the day on the 16th, and the daily baseline is holding steady at that level. The NDXT equal weighted big fat cap balance sheet extraordinaire megatech index looking back to February of 2022, you can see that this downtrend line was broken to the upside again here. It tried once before and didn't make it, but this time it is above it and approaching the DeMark relative retracement 0.382. And the history of the NDXT shows it blasting out of a one-sided diamond pattern here and hit the DeMark relative retracement 0.382 level here, and has been in a choppy sideways range bound here, and then went above it here, that downtrend line here, came back down. It's been bouncing around on the 50-day simple moving average here, you can see in the thumbnail, and now is poking its nose above this downtrend line. And the NDXT daily chart in DeMark shows the relative retracement level anchored at the October 2022 low. And here's that relative retracement level here. It can become qualified and confirmed like the other levels too, so that's something to watch moving forward. The ongoing supply line was qualified yesterday, and that was a real sleeper move on that bar yesterday on the 15th. There were 3 consecutive down closes, and then it just blasted above that ongoing supply line to qualify it. And this P alert down is showing price coming off of an oversold condition from down here. And then the pressure indicator, which has spent a long time in the upper range here, finally started going down a little bit here as per this indicator over here. And it's staying up there now and looks like it wants to go back up. But the fast trigger is already up in that area, and the slow trigger is headed that way. So then once all these meet up here, we'll definitely have an overbought condition. So if the NDXT price can really make it past this relative retracement up 1 here, and start going after the high over here on March 31st, then this C5 will shift over if it exceeds it, and that will be over here. We'll lose the B2 and start over again with the A1. And that's a scenario for the perfect world. More than likely, we'll just stay in this trading range here. And here's the NDXT index in investing.com. And it was a lot of the semiconductor and manufacturers that really led the day yesterday. Look at Atlassian Corp. It had a move of 7% up, and software did pretty good here. This security company, CrowdStrike, 4%. And then you start getting into the nosebleed for price securities. Look at KLAC, moved up 17 points. Lam Research, 25 points. AMD has been doing fairly well, even though they had a bad earnings report. So that's been moving up also. So they're leading the way over here. And now to throw cold water on the tech rally, here's the weekly NASDAQ composite new highs, new lows that was updated the other day up to the 12th of May. And you can see the divergence lives on. This is a bearish divergence, these red arrows. We have price going up and the new highs and new lows going down here. And the indicator for new highs and new lows shows no indication whatsoever of pulling back on the stick and moving up. However, when it does decide to do that, the signal line will be right close by, and it should have a crossover pretty quick once it makes that indication for a move up. And again, this is the NASDAQ composite, but everything that we just looked at in the big fat cap balance sheet extraordinaire big tech NDXT index is in here, so they are definitely leading the way, and the other 3,000 in the NASDAQ composite are definitely floundering. The S&P 500 support and resistance levels big board chart shows the gray areas at the 20 simple moving average, then the pivot point, and the daily ongoing supply line. And this ongoing supply line price would need to open above it for start of today and close above it for the end of today. And price in the pre-market hours for the S&P 500 at 7 o'clock a.m. Central Time is 41.30. So it's close there. However, if it doesn't open above it, as we know, and subsequently closes above it for end of day, this level will become disqualified and could be a fading opportunity in the opposite direction. So to the immediate downside, looks like 41.17 is the level to watch for S1, the 21 EMA daily baseline. And then around there is the weekly diamond extension, bottom line perfect uptrend channel here right in the same area. And then below that is the daily conversion line. Get out of the 4100 zone, and S2 is right there at 40.98. So to the immediate upside is R1, then R2, and right around there is the top of the range, 41.64. The S&P 500 daily AD line remains slightly below its 21 EMA signal line, so it's trying to get back above there for a positive crossover. And the daily AD line for the NASDAQ 100 is definitely above its 21 EMA signal line. and the RAC 1 going sideways yesterday. And here's a screenshot of yesterday's big board. You can see it was right around zero, negative 0.16, and going sideways. And that's at least the 5th or 6th time that I've paid attention to it succeeding 100% of the time of those 5 or 6 times. And there were plenty of times before that it succeeded. 100%, I think, is its scorecard for indicating an up move the next day. And the ATR2 is still within its green low volatility zone and pointed down. And the PPO extreme is right around 2.64% above zero, trying to get back above 3% still. And the New York traditional McClellan breadth oscillator to get back to zero improved greatly yesterday. It would require 421 advancers over decliners to get back to zero. And the day before that it was 1515. So we're almost above zero there. Have a great day.